My name is Farhan. Today you will solve question number 7 from 2014 past exam. This question requires you to record the balance day adjustments for two different companies and then also prepare the advertising expense ledger account at the end of the reporting period. You can get to see the workings on the right hand side of the screen, which I'll explain step by step, and the question on the left hand side, which is question number 7, that we will start now. Mark Petroleum is an Australian oil company. In 2014, it agreed to run a television advertising campaign during the upcoming cricket season. The business will provide a new car to one lucky viewer at each of 5 one-day cricket games that will be telecast live in Melbourne. So, what we understand based on the first paragraph is that Mark Petroleum wants to run a television advertising campaign, and as part of this advertising, they will purchase 5 identical sports cars, which they will give to one lucky viewer at each of the 5 cricket games that will be telecast live in Melbourne. On 5 October 2014, Mark Petroleum paid MGH Motors $330,000, including GST, for 5 identical sports cars. One car is to be delivered by MGH Motors and awarded to the lucky viewer during the telecast of the game on each of the following dates: 17 October, 24 October, 7 November, 14 November, and 6 December 2014. Both these companies report on a monthly basis. Our first requirement for this question is to prepare the general journal entry to record the balance day adjustment required by Mark Petroleum on 31 October 2014. Now, I need you to understand that we have 5 cricket games, but in the month of October itself, we only have 2 cricket games that are happening, which are the games on 17th October and 24th of October. And the rest of the games are going to take place the next month. So I've drawn a timeline to represent what's going on, which you can see. So within this timeline, I have identified 4 different dates, starting with the 5th of October, when the first transaction took place, where Mark Petroleum paid $330,000, including GST, which basically means $300,000 excluding GST. And we classify this as prepaid advertising of $300,000 excluding GST. The reason we classify this as prepaid advertising is because, based on the first paragraph, we understand that these 5 cars were purchased for advertising purposes. And we call it prepaid because on 5th of October, we have the economic benefit of $300,000 within this prepaid advertising. We haven't consumed any of these economic benefits yet. So there's nothing to expense at the moment, given that we are at 5th of October 2014. So the cost of one car on the 5th of October would be $300,000, which is the total cost excluding GST, divided by 5 cars, which is $60,000 per car. Now, the first game takes place on the 17th of October, and the second game takes place on the 24th of October. So within these 2 different dates, we will be expensing a part of the advertising campaign that we have prepaid on the 5th of October. Given that we understand that the cost of one car is $60,000, this means during the first game on the 17th of October, we will expense $60,000 in advertising. And again, on 24th of October 2014, during the second game, we'll expense another $60,000 in advertising. And 31st October 2014 here highlights the end of the reporting period. So 31st of October, which is obviously the closing balance, given that we understand that out of the $300,000 that we have prepaid for advertising, we have expensed $120,000. All right, so we have already consumed $120,000 of the economic benefit that comes with the prepaid advertising transaction that we have made on the 5th of October, and that was $300,000 in total for 5 cars. So on 31st of October, the closing balance, now that we have expensed $120,000, would therefore be $300,000 minus $120,000, and that is $180,000 for prepaid advertising. So at 31st of October, prepaid advertising has a closing balance of $180,000, which is a current asset at the end of the reporting period. And this amount is still yet to be consumed by the business, which will be consumed in the month of November when we have game number 3, game number 4, and game number 5 taking place on 7 November, 14 November, and 6 December. Now, what about the journal entry from the perspective of Marv, which is the requirement of the question? So we have to journalize at the end of the reporting period, which is 31st of October 2014. And we have expensed $130,000 worth of advertising for 2 cars given out on 2 different cricket games. And that's debit advertising expense of $120,000. At the same time, we have consumed the economic benefit that comes with the prepaid advertising expense payment that we have made on the 5th of October 2014. Now that assets have gone down because we have expensed it, we have consumed some of the economic benefits. To reflect that decrease in assets, we are crediting it. So when we have expenses, we debit them, and when assets go down, we credit them. So we debit advertising expense by $120,000, and we credit prepaid advertising expense by $120,000. So let's fill this in the outline for general journal that we are given for part A. So for the 31st of October, we are debiting advertising expense in the general ledger of $120,000, and we are crediting prepaid advertising expense, which reflects an increase in asset and a decrease in the economic benefit that comes with the prepaid asset, and that's $120,000 on the credit side. And you might have a question, why is it that we are recording this within the general ledger section? Now, what's the difference between general ledger and subsidiary ledger? General ledger contains accounts for assets, equity, liabilities, income, expenses. And within these assets, we have accounts for accounts receivable and accounts payable. Accounts receivable and accounts payable, the accounts that we have in the general ledger, they are providing a summary of all the transactions that we have done with all the credit customers and all the credit suppliers of the business. But if we were to look into the subsidiary ledger, let's just say within the accounts receivable total amount that has been reported in the general ledger, we understand that we have 3 credit customers. In the subsidiary ledger, we're going to have separate individual accounts for each of these 3 credit customers, and each of those accounts are going to show the transactions that we have done separately with each of these 3 different customers. Let's think about the accounts payable as well. So accounts payable, well, the credit suppliers of the business, we have a summary of all the transactions that we have recorded with all the credit suppliers, which is what we're going to be seeing in the general ledger. But if we were to take this to the subsidiary ledger, let's just say we have 3 credit suppliers. So in the subsidiary ledger, you're going to have 3 different accounts for supplier 1, supplier 2, and supplier 3. And each of those 3 different accounts will show the transactions that you have conducted with each of the suppliers separately. So these are the main differences when it comes to understanding general ledger and subsidiary ledger. So the journal entry that we're doing at the moment has no accounts receivable nor any accounts payable, so we have really nothing to worry about. We are simply debiting advertising expense by $120,000, which reflects an increase in expense because an economic benefit has been consumed. And to reflect that consumption in economic benefit, we are decreasing the value of the asset that comes with the prepaid advertising, and that reduction is $120,000 reflected on the credit side of the general journal. Okay, so that's all for part A. So let's move to part B. So part B says, prepare the general journal entry to record the balance sheet adjustment required by MGH Motors on 31 October 2014. Right, so MGH Motors is the company who is supposed to deliver each of these 5 cars at each of these 5 cricket games. All right, so from MGH Motors perspective, if we are there on 5th of October, given that we're receiving $330,000 including GST or $300,000 excluding GST for 5 cars, in our books on 5th of October 2014, we will record unearned revenue of $300,000. The reason we call this unearned revenue is because we have received the payment in advance and we are yet to deliver each of these cars when we are getting the money on the 5th of October 2014. All right. So on the 5th of October 2014, we haven't earned any of the revenue for $300,000. It's all a current liability. So if we were to do the closing balances at 31st of October, given that we understand that we have already delivered 2 cars, then that means we can actually recognize sales revenue that we have earned of $120,000. All right. So this $120,000 in sales revenue that we have earned is what we are going to report in our income statement under the accrual basis assumption, which calculates profit by subtracting expenses incurred from revenues earned. So this is specifically the revenues that we have earned for 2 cars that we have delivered on the first 2 cricket games on 17 October and 24 October. And that is $120,000 in total, given that the cost of each car is $6,000. So 2 cars delivered is $120,000. This means we still have current liability. We still have an obligation at the end of the reporting period on 31 October, and that obligation in unearned revenue is $180,000, which are the delivery of 3 cars that we will be making in the next upcoming months. Okay. So from the perspective of MGH Motors, if we were to do the balance day adjustments at 31 October, we first debit unearned sales revenue by $120,000. So when we debit unearned sales revenue by $120,000, we are saying that we are reducing our obligation, our current liability, and when liabilities go down, we debit them. So we debit unearned revenue by $120,000. At the same time, we have recognized revenue. Revenues have been earned. And when revenues are earned, we credit them. So credit sales revenue by $120,000. So this is the journal entry that we need to use in the working space given here. And again, we don't have any accounts receivable, nor do we have any accounts payable, so we can record this debit and credit within the section of general ledger. So 31st of October, so we debit unearned sales revenue by $120,000, and then we credit sales revenue by $120,000. All right. So what's the last requirement of the question? So the last requirement of the question is to prepare the prepaid advertising expense ledger account for Marf Petroleum at 31 October 2014, and you're not required to balance this account. So I've already done this, so let me explain you what's happening. So we understand that prepaid advertising expense initially refers to a current asset where we have some economic benefit stored, and we will consume that economic benefit and expense this over a period of time. So on the 5th of October, we know that we have purchased $300,000 worth of advertising, which is obviously prepaid, excluding GST. So when we are purchasing prepaid advertising of $300,000, this is increasing our current assets for prepaid advertising. Okay. So because prepaid advertising as an asset is increasing, and when assets go up, we debit them. So that's why on the debit side of the ledger account, on the 5th of October 2014, we are saying that we have purchased $300,000 worth of prepaid advertising. So on the credit side, you can see that for 31st of October, at 31st of October 2014, included the closing balance of $180,000. So where does this $180,000 closing balance come from? If you recall, we have expensed 2 cars in advertising, and that was $120,000, which leaves us with $180,000 in prepaid advertising closing balance that we are still yet to consume. So assets within the ledger account should always have an opening balance on the debit side and a closing balance on the credit side. So that's why we're recording the closing balance of $180,000 in prepaid advertising expense on the credit side. And then we're expensing $120,000 as well, because this expense here reflects the reduction in the prepaid advertising, which is originally a current asset. And this $120,000 reflects the consumption for two different cars that we have made in terms of advertising expense. That's all for today's lesson. I believe you found a lot of value in this content. Make sure to like this video and subscribe to this channel, and I'll see you in the next video.